What a crazy week. The markets just had one of the biggest rallies since the pandemic recovery, and today we are going to break down why exactly this is happening. Whether you love him or hate him, Donald Trump's victory sent shockwaves through the financial markets, with stocks hitting all-time highs and Bitcoin smashing through $75,000. Before we dive into this topic, remember this is just market analysis and nothing in this video is political commentary. And of course, everything in this video is for educational purposes only and not financial advice. I do have a lot of thoughts on the election as well, but this is not that kind of channel. Maybe one day. Anyway, let's begin. Let's start with the incredible numbers we are seeing. The Dow Jones Industrial Average surged over 1500 points. That's a massive 3.6% gain in a single day. To put this into perspective, this is the kind of move that only happens once or twice a year, so this is quite incredible. If you look at the S&P 500, it jumped 2.5%, hitting a new all-time high. But here's what's really interesting. The Russell 2000, which tracks the smaller US companies, shot up 4.8%. This tells us that people are betting on the US domestic businesses. We'll look at the reasons in a bit. One of the biggest winners was actually the banking sector, with JP Morgan Chase up 11.5%, Capital One soaring 15%, and get this, Discover Financial Services rocketing 20.2% in a single day. These are moves typically seen in small cap stocks and not major banks. So the main question is, why is this happening? Why are the markets going up so much? The first reason, the most important reason, is that the markets love certainty. And with Trump's clear win, uncertainty disappeared overnight. Investors are pricing in three main factors now: lower corporate taxes, reduced regulation, and America First policies. And the banking sector is also one of the biggest winners of this. Trump's expected policies benefit banks in three ways. Firstly, it's lighter regulations, that means lower compliance costs. The second is high interest rates typically boost bank profits. And third, more merger and acquisition opportunities. Let's circle back to the policies in a bit, but first, let's talk about what's happening in the crypto markets, because it's absolutely mind-blowing. Bitcoin didn't just break its previous all-time high, it absolutely destroyed it, reaching over $75,000. It was absolutely incredible seeing this happen as the results were unfolding. Even Coinbase stock surged over 31.1% in a single day. There are three main promises related to crypto. The first, Trump specifically stated he wants to make the US the crypto capital of the planet. He mentioned creating a strategic reserve of Bitcoin. This is a complete 180 turn from the current administration's stance on crypto, and institutional investors are betting big on this policy shift. Now, how the crypto industry will evolve and if he'll keep his promises are not that important. You see, in crypto, the most important thing is signal, news, and hope. Fundamentals actually come second, so it's not that important. Yes, I know it's not very trustworthy. One more thing is that it's lining up pretty nicely with the 4-year cycle that crypto has so far maintained. So no matter what happens in the long run, in the short to medium term, a crypto surge is expected. Even altcoins like Solana and Dogecoin are doing pretty well so far. So now let's look at a bit of a boring topic, but one of the most important things when it comes to this election, that is the policy expectations. As you know, markets are always forward looking and they're pricing in quite a few policy changes. There are three main ones that I want to talk about today. The first is that Trump is expected to extend the 2017 tax cuts, which could boost corporate profits by 10 to 15%. This means overall all businesses stand to benefit from it, and so do the shareholders. The second one is that he's planning a universal tariff on imports. This can be as far as 60 to 100% on Chinese goods. And this explains why domestic companies are rallying while international stocks are struggling. The third one is that we are looking at major deregulation, especially in the banking and energy sectors. If you have been following closely, regulations have come down quite hard on big tech as well. We might see further deregulation in this space, and we also want to see what's going to happen to Lina Khan. She's the commissioner of the US Federal Trade Commission and she's quite against mergers and acquisitions. But from the looks of it, it seems like she'll be fired soon. This goes for the SEC chair Gary Gensler as well. Let's see what's going to happen to him. So yes, there are lots of policy changes that are expected and we'll see if and when they come. I also want to talk a little bit about the biggest winners and losers of this election, and this discussion cannot be had without mentioning Elon Musk. Tesla has jumped quite a bit, and this is due to the Musk-Trump alliance. There are also expectations of lighter EV regulations that Tesla will benefit from. But basically, he bet everything on this election and it looks like he's winning, whether it's SpaceX or Tesla. The next, as we saw, are the small cap domestic companies that are surging. They'll be the one benefiting the most from America First policies. They have less exposure to international trade tensions as well. On the flip side, there are companies that are heavily dependent on Chinese manufacturing and they'll be struggling. Renewable energy stocks like First Solar dropped 13% and Chinese tech stocks were down 3 to 5% as well after the election. I understand that I'm throwing a lot of information at you and there's so much to discuss that it's impossible to pick and choose, but I'm trying my best to summarize some of it for you. In the coming months, we'll see how all of this unfolds and we'll keep a track of these things and I'll keep sharing more and more with you. If you're enjoying the video so far and would like to watch my videos every Friday, hit like and consider subscribing. I also understand that it's quite hard to keep politics aside when it comes to investing, but you have to do so to become a good investor. In fact, it's been shown that over a long period of time, politics doesn't really matter when it comes to investing. In fact, I made a full video about it recently, feel free to check it out. I'm actually quite political, but when it comes to investing, I keep all the politics aside and always plan for all the scenarios. It's not in my control and I'm not going to be relying on it. You should do the same and stick to an investment thesis irrespective of who's in power and what they are doing, because you have to invest for decades to come. You cannot be taking decisions just based on these things. So all this is great, but what does this mean for your portfolio? Firstly, there's several opportunities in the market right now. Again, this is not financial advice, but consider increasing exposure to small cap domestic companies in the US. You should also consider investing in traditional banking stocks, and you should not ignore the energy sector and the policies that are going to be implemented with respect to this. And finally, you should also be looking at Bitcoin and major cryptocurrencies. Even though I'm saying all of this, the most important thing is to not take any emotional decisions when it comes to politics. Remember that market can price in expectations quite quickly, but the reality plays out over a long period of time, and what really happens will be seen later in the future. You should not be taking decisions all at once anyway, and you should slowly dollar cost average into things that you believe in now. There are some things like the tax cuts that may play a role much faster than some of the other policies will. There are also some risks that you should watch out for. Firstly, be cautious with companies heavily dependent on Chinese manufacturing. You should also reconsider some of your renewable energy investment allocation. And finally, be careful of investing in international growth stocks because they might see pressures from the tariffs. Remember, the president only has so much power. The House and the Senate play a much bigger role when it comes to certain things, especially the markets. Again, I've covered this in the video I spoke about earlier. When it comes to this topic, generally speaking, there are three key takeaways that you should keep in mind. First is to never make emotional investment decisions. The second one is to stay diversified because promises and politics can change quite quickly. And the third is to always focus on your long-term strategy. So all that sounded pretty straightforward, but it's quite hard to follow and we should all try to do that. If you're somebody who only invests in the S&P 500, stick to your plan. Dollar cost average for the next few decades. Forget about the politics and what happens in the markets. Over a long period of time, it's people like you who end up winning this race. For me, I'm not just an investor in the S&P 500 and I've picked quite a few individual stocks as well. I'm keeping my eye especially on two sectors. One is crypto and the second is financial services. Let's see what happens there. Overall, I know there are lots of people who are panicking about many different things. All I have to say to you is do not panic. Please keep investing. Please keep living your life. On that note, I'll see you next week in a new video. Till then, keep learning and stay on top of your finances. Until next time.